REITs continued what has been a very strong 2010 in October, up more than 4.5%. Joining me is Brad Case, NAREIT Vice President of Research and Industry Information. So Brad, what's going on there?
Well, I think the market's been very strong for REITs. That's really nothing new this year. The REITs are up actually 23.9% over 2010 as a whole. Very strong performance. But if you look at their longer-term performance, it's really right about at average. Over the last 10 years, REIT investors have gotten 11.4% per year, whereas investors in the broader stock market have seen no gain at all over that same 10-year period.
And looking at NAREIT's numbers for October, the industrial sector, the lodging sector were among the top-performing equity REIT sectors. There are still some lingering concerns about the economy. What are investors seeing there that's driving those two up?
Yeah, those sectors in particular were very strong. Industrial REITs were up 11.9% during October, and lodging REITs up 9.6% during the same month. I think what's really going on there is investors are looking at the economy, and it's still, of course, very soft. But investors think that they're looking at what going forward will be significant strengthening in operating fundamentals. Increased trade and manufacturing activity, and that's bringing up investors' valuations of industrial REITs, and increased business travel as well as vacation travel, and that's strengthening their thoughts as to the performance of lodging REITs going forward.
Now, Brad, I know the last time we filmed one of these videos, you mentioned mortgage REITs as being a strong performer. Well, they did it again in October. What's going on in the mortgage sector now?
Yeah, I think mortgage REITs continue to be a pretty interesting story. Mortgage REITs are up 64% from their market bottom. They've performed very strongly, and in fact, the liquidity crisis has been over for REITs for a year and a half. REITs have access to capital on good terms, and that really puts mortgage REITs in their sweet spot as far as earnings going forward, and yet their dividend yield is still very close to 14%. And in this kind of an environment, it's awfully difficult for investors to find strong dividend yield anywhere. The REIT industry as a whole gives it to them, but the mortgage REITs give it to them much more strongly at 14%.
For more on this and other news and information, be sure to check out REIT.com. I'm Matt Bishart.